Hi, good day everyone. I am Jocelyn P. Cabesan, and today I am going to discuss about the tax compliance. This topic is the continuation of the tax return. And before I will start my discussion, first I will introduce my co-reporters. Rochelle Lacais she report about the requirements, and Jenny Rubio will discuss about the 6K of tax compliance and requirements, and also Juna Grace will report the tax compliance services in the Philippines. What is tax compliance? What is tax compliance? Tax compliance, it is measured in terms of tax gap, and also tax compliance, it refers to the taxpayer's decision to comply with tax laws and regulation by paying tax timely and accurately. Tax compliance. In short, it measured all tax returns have been filed and tax has been paid on time. A taxpayer needs to take the following steps to get into a tax compliance. File all tax and return on or before the due date. If you are an employee, sufficient have need to be withheld, covered your tax bill. If you are self-employed, estimated tax payments need to be made each quarter as required. If you are a business, payroll taxes need to be deposited on time for each period. All future tax returns that are due must be filed timely. Self-employed individuals need to be filed quarterly estimated tax payment with the Form 1040 ES by the following due dates: April 15, June 15, September 15, and January 15. If you are a business, then the employer needs to be filed and pay the taxes withheld from their employees on a quarterly basis with the Form 941. Why is tax compliance is important? Compliance with tax law is important to keep the system work for all and supporting the programs and services that improves lives. One way to encourage compliance is to keep the rules as clear and simple as possible. A taxpayer needs to get into compliance and maintain compliance to avoiding getting into trouble with IRS. IRS means Internal Revenue Services. Failing to file a tax return or filing a tax return with balance due sets up whose or terrible problems with the IRS, including the penalties, notices, and stress. If a taxpayer's account get into the collection division inventory because of the unfiled tax return or unpaid taxes, the Internal Revenue Services Collection Division will start to process to collect delinquent taxes and secure the tax return. The Internal Revenue Services also place a levy on your bank account, wages, or other sources of income. If you are a business, in extreme cases, the Internal Revenue Services could seize your assets. The tax compliance is also a prerequisite to Internal Revenue Services problem resolution. The Internal Revenue Services looks closely at taxpayers who are not in compliance to make sure that such taxpayers stop pyramiding amount owed. In general understanding is when an individual or business is current with their taxes, they are more likely to be protected from collections such as bank, leaves, and garnishment. It also shows that the individual or the business is making an effort to get back on track and make things right with the Internal Revenue Services. Internal Revenue Services is more willing to work with such taxpayers to resolve their tax debt and provide additional time by placing hold on the taxpayer's account. When the taxpayer reaches an agreement with the Internal Revenue Services, taxpayers is expected to return in compliance. in compliance with regards to all the future tax filings and tax payments. If the taxpayer falls off track, any agreement made with the Internal Revenue Services is off the table immediately, and the taxpayer must start the entire process of tax resolution again with regards to not only to back taxes but also any new tax periods and tax debit that were created. Tax compliance must be the primary focus of any individual or businesses working to resolve their tax problems. Next steps is file your current year tax return on time. If you are not ready, file an extension. Second is if you owe taxes, pay them by due date. If the extension not only allows you to file the return later, it does not extend the time to pay. File all past due tax return regardless of whether or not you can pay full. If you cannot pay, set up a settlement with the Internal Revenue Services. The sooner you do this, the better is for you. If you will not minimize the penalties and interest, but also no collection action will be taken place against you.
Thank you for that very detailed report, Ms. Jocelyn Cabasan. Good day, everyone. I am Rochelda M. Cajes, BSEIS Second Year Block 1, and today I will be discussing the compliance requirements. Compliance requirements. Payment of corporate income tax is made through a self-assessment system where the taxpayer files a tax return reflecting the revenue, deduction, and the tax due. The annual income tax return is due on the 15th day of the fourth month following the close of the calendar or fiscal year. Mandatory electronic filing. The Bureau of Internal Revenue or BIR has two electronic platforms for filing. The first one is the electronic filing and payment system, and the second one is the online BIR form system. So here are the following corporate taxpayers are mandated to use EFPS. EFPS means the electronic filing and payment system. First, Taxpayer Account Management Program taxpayer. Accredited importer and prospective importer required to rescue the BIR ICC and BIR BCC, national government agencies, all licensed local contractors, enterprises enjoying fiscal incentives, corporations with complete computerized accounting system, corporations with paid-up capital stock of 10 million pesos and above, procuring government agencies with respect to withholding of VAT and percentages taxes, government bidders, insurance companies and stockbrokers, large taxpayers, and the last one is the top 20,000 private corporations. So here are the following corporate taxpayers are mandated to use the BIR's online e-BIR's form system. First, accredited tax agents or practitioners and all its client taxpayer who authorize them to file in their behalf. Accredited printers of principal and supplementary receipts or invoices. One-time transaction taxpayers. Those who engage in business or those with mixed income or both compensation and business income who shall file a no payment return. Government-owned or controlled corporation, local government units, except barangays, and the last one is the cooperatives, registered with National Electrification Administration and local water utilities administrations. Requirement to prepare tax computation return in functional currency. Taxpayer filing tax returns in the Philippine peso may pay the tax in functional currency computed using in the functional currency buying rate of the collecting bank in the Philippine peso. At the time of payment, the collecting bank shall, however, report to the BIR said collection in peso as converted or translated. So here are the documents to file with tax return. The following have to be submitted together with the annual corporate income tax return. First, certificate of income payments not subjected to withholding tax. Certificate of creditable tax withheld at source. Summary alpha list of withholding taxes. Duly approved tax debit memo. Proof of foreign tax credits. Income tax return previously filed and proof of payment if amended return is filed for the same taxable year. account information form, and or the certificate of the Independent Certified Public Accountant or the CPA with audited financial statement if the gross quarterly sales, earnings, receipts, or output exceed with 3 million pesos under the train law. Proof of prior years exists tax creditors if applicable. And the last one is the certificate of entitlement to incentives provided by investment promotion agencies. Payment of estimated tax. Income taxpayers are required to file and or pay on a cumulative basis during the first 3 quarters within 60 days from the end of each taxable quarter. Penalties for non-compliance. Compromise penalties listed in Revenue Memorandum Order or RMO number 7/2015 will be imposed. RMO 7/2015 provides for the consolidated schedule of compromise penalties for violations of the National Internal Revenue Code, depending on the nature of the violation. The maximum compromise penalty imposed is 100,000 pesos. However, there are violations that cannot be compromised. Penalties and or interest for underpayment of taxes. Surcharge of 25% and the deficiency interest of 20% per annum. Kindly note that with the train law, the rate of interest is not set at twice the prevailing bank interest rate. The next to report is Ms. Jenny Rubia.
Good day, ma'am. My name is Jenna Arabia, and my topic is all about a complete checklist of year-end tax compliance for corporations in the Philippines. So, every end of the year, organizations must file and submit their tax compliance requirements to the Bureau of Internal Revenue to ensure that their business is allowed to operate in the next year. And in order to prepare, there are checklists provided for the necessary documents to ensure to comply with the year-end tax compliance in the Philippines. So, the first one is the submission of books of accounts. There are 3 types of books of accounts which could depends on such company size and financial capacity. Compliance to be submitted to BIR is as follows. First is the manual book of accounts, second is the loose leaf books of accounts, and the third one is the computerized books of accounts. So, manual books of accounts under Revenue Memorandum Circular number 82 2008, taxpayers who are maintaining manual books of accounts must register new books when the pages of the previously registered books have been already exhausted. And the loose leaf books of accounts, businesses maintaining loose leaf books of accounts must submit the bounded books of the accounts for the taxable year on or before January 15. And the computerized books of accounts, taxpayers must submit their computerized books in CDR, DVD-R, or other optical media for the taxable year on or before January 30. And the second one is the submission of BIR Form 1604CF and BIR Form 1604E. BIR Form 1604CF or the Annual Information Return of Income Taxes Withheld on Compensation. This form consists of the summary of withholding tax on compensation and the summary list of employees existing and resigned during the taxable year. And the BIR Form 1604E or the Annual Information Return of Creditable Income Taxes Withheld Expanded Income Payments Exempt from Withholding Tax. This consists of the summary of withholding tax expended, paid, and filed, and the summary list of income payees during the taxable year. And the third one is the submission of BIR Form 2316. The BIR Form 2316 is a return that details an employee's income earned with a corresponding tax withheld and remitted to BIR. Such is due for distribution and filing on the current and existing employee on or before January 31. Additionally, employers are required to submit copies of such documents on or before February 28. The fourth is the annual income tax returns and audited financial statements. Companies and taxpayers engaged in business are required to submit a copy of annual income tax return and audited financial statements to BIR and the Securities and Exchange Commissions on or before April 15. And the fifth one is the inventory list and other reportorial requirements. RMC number 57 2015 requires taxpayers to submit a list of inventory such as finished goods, work in progress, raw materials, supplies, and stock in trade. It must also include other tangible asset-rich balance sheets such as accounts receivable and submit them on or before January 30. And the sixth one is the summary list and tenants and other requirements. According to the Revenue Regulation number 12, 2011, taxpayers engaging in the leasing or renting of property for commercial activities must submit the following: the layout of the leased property, a certified true copy of lease agreement per tenant, and a latest lease information sheet. And the last one is a summary list of regular suppliers. Under Revenue Regulation number 14, 2008, taxpayers determined by the BIR to belong in the top 5,000 individual or top 20,000 private corporations must submit a summary list of its regular suppliers of goods and services to the Large Taxpayers Assistance Division or Large Taxpayer District Office. The list must be made on a semestral basis and submitted on January 31 for the second semester and July 31 for the first semester. Sorting out taxes at the end of the year requires a large amount of effort. Having a checklist can help you to avoid overlooking several requirements and deadlines, keeping companies safe from unwanted penalties as the year ends. And that's all. Thank you.
Tax compliance. Tax compliance services in the Philippines. AHC. Certified Public Accountants Limited co-provides tax outsourcing to local and foreign companies in the Philippines. Our tax compliance services are designed to assist corporations and individuals in migrating their tax liabilities with the government. Our CPAs will aid companies in filing their monthly, quarterly, annual tax return to settle their tax obligation with BIR. So, tax compliance assists businesses, individuals in filing their tax returns on time to help them avoid incurring penalties and interest rates. They also help enterprises with the presentation of their accounting records for compliance and record-keeping purposes. Our CPAs are committed to compute and prepare your tax figures before the prescribed deadlines. So what is BIR? BIR, or Bureau of Internal Revenue, is a government agency tasked to inform tax regulations on individual and corporation to finance the government's expenses for the development of infrastructures and improvement of social services in the Philippines. BIR is reminding the commercial banking and financial sectors that the bank secrecy rule only applies to bank deposits and government securities. So BIR is under Section 2 of the National Internal Revenue Code of 1997 NIRC. The primary duties of the BIR are as follows: assessment and collection of all national revenue taxes, fees, and charges, and enforcement of all forfeitures, penalties, and fines. The types of taxes and tax returns to submission to BIR. Corporate and individual taxpayers are required to submit their tax returns based on the tax of national local taxes applicable to them. Individuals who work as a freelance worker file BIR Form 1701 and 1701Q and 1604 CF. We provide access to the list of taxes applicable to enterprises and self-employed entities looking to identify the required tax returns for the filing. BIR forms related to the kinds of taxes paid are also included together with their filing period. Here are types of taxes in the Philippines for individuals and business entities. The capital gains tax, donors tax, documentary stamp tax, state tax, percentage tax, withholding tax on income payments, value added tax, income tax, and others. So withholding tax on income payments have four uh, kinds or types, parts. The expanded withholding tax, the withholding tax on compensation, the final withholding tax, and withholding tax on government money payments. BIR compliance requirements. Taxpayers must observe the compliance requirements listed in Title 9 Compliance Requirements of an IRC. Individuals or business entities must keep and preserve their accounting records and register their businesses to the appropriate revenue district officer of their place of business. As an accounting of tax service provider in the Philippines, we provide two special services on taxation, such as tax compliance review and tax planning advice. We extend our aid to assist the internal process and tax structures of your business entity to help you conform with BIR's requirements properly and with ease. Here are the penalties of non-compliance. According to the tax code, the BIR will impose an additional 25% of payable amount if the taxpayer fails to submit their tax returns or pay their outstanding balances due to any of the following. First one, failure to file any tax returns on tax dues on the deadline as required under the provision of the tax code. Unless authorized by the BIR's commissioners, filing a tax return to an unauthorized person other than the Internal Revenue Officer. 3. The failure to pay the deficiency tax within the prescribed date and time of payment in the notice of assessment, or the taxpayer doesn't partially or fully pay the tax amount. As prescribed under the NIRC, taxpayers with unpaid taxes are imposed with an interest rate of 20% per year or higher from the date prescribed until the business or individual has paid the amount due. Financial losses, security breaches, license revocation, business disruption, poor patient care, trust erosion, and a tarnished reputation can all result from non-compliance. So here's a quick rundown of consequences. Here is an example of non-compliance penalties. The employees and banks with provide information concerning income and wealth. So you may be subject to a non-compliance penalty if you refuse to participate with audits and compile and maintain stop list. So, motivate to kung di mo complies or sa mga non-compliance. And that's all. Thank you.